Everyone thinks Trump's Bitcoin reserve is extremely bullish. Government adoption, legitimacy, Bitcoin to the moon. But there's one detail nobody is talking about. And once you see it, you'll understand why this could completely change how Bitcoin moves next. Crypto Twitter is celebrating right now. Trump promised a strategic Bitcoin reserve, the US government holding Bitcoin like gold. To many people, this feels like the final confirmation that Bitcoin has won. But before you get excited, you need to understand how this actually works, because what looks like rocket fuel might quietly turn into a ceiling. Let me show you what everyone sees first. Then I'll show you the part almost everyone is missing. At first glance, the bullish case is obvious. The US already controls over 200,000 Bitcoins seized from criminal cases, roughly $18 billion at current prices. More Bitcoin than most countries will ever own. Now imagine what that signals to the world. America officially treating Bitcoin as a strategic asset just like gold or oil. And that alone changes the narrative overnight. And it doesn't stop there. Senator Cynthia Lummis wants to go even further. Her proposal calls for buying 1 million Bitcoin over the next 5 years, around $90 billion at today's prices. If that happens, the US government becomes the largest Bitcoin holder on the planet. Think about the supply shock for a second. 1 million Bitcoin is about 5% of the total supply. Remove that from circulation, and basic economics says price goes up. That's why Wall Street is already positioning. Bitcoin ETFs are seeing massive inflows. Institutions are front-running what they believe will be the biggest adoption event in crypto history. The story writes itself. If America does this, other nations can't afford to ignore it. A global Bitcoin arms race. Prices exploding. So where's the trap? Here's the part most people don't understand. Governments don't buy assets the way you and I do. When the US Treasury decides to acquire Bitcoin, they don't market buy on Coinbase. They build structured purchasing programs spread over years using OTC desks, private deals, and controlled execution. And this creates something dangerous. I call it the government ceiling effect. Here's how it works. If Bitcoin rallies to $120,000 and the government is scheduled to buy tens of thousands of coins that month, who sells to them? Long-term holders taking profits, funds de-risking, institutions rotating capital. Instead of pushing price higher, the government becomes a predictable buyer at known levels. Every rally meets supply. Every breakout gets absorbed. The reserve doesn't accelerate the move, it smooths it. And smoothing sounds good until you realize explosive moves disappear with it. But that's only the first trap. The bigger one is political risk. Bitcoin's greatest strength has always been independence from governments. But the moment Bitcoin becomes a strategic reserve, it becomes political. Ask yourself this. What happens during a debt crisis? What happens during a war? What happens when Congress needs liquidity fast? Strategic assets get discussed, reviewed, and sometimes sold. Now imagine Bitcoin being debated on live television, opposition politicians calling it wasteful, campaigns promising to liquidate it, markets reacting to every rumor and headline. At that point, Bitcoin isn't just volatile, it's politicized. And it gets worse. Once the government owns a meaningful share of Bitcoin, price no longer reacts only to adoption or technology, it reacts to policy signals. A single sentence from the Treasury Secretary, a vague comment about reviewing strategic assets, could move the market double digits in hours. This is how moral hazard creeps in. Instead of organic demand, the market starts relying on government support, and reliance creates fragility. But there's one final trap that almost nobody talks about: regulation. To hold billions in Bitcoin, the government needs rules, custody rules, reporting rules, compliance rules. And those rules won't stop at the reserve. They spill outward. More surveillance justified as protecting national assets, more reporting requirements, more pressure on private custody and mining. What starts as adoption slowly turns into control. I'm not saying the strategic Bitcoin reserve will definitely fail. Short term, it could be bullish, very bullish. But long-term, the risks are real. So here's what you should watch closely. First, implementation. Gradual, transparent buying with minimal regulation is bullish. Rushed legislation packed with controls is not. Second, market behavior. If Bitcoin becomes calmer and capped, the ceiling effect is forming. If it starts moving on political headlines, it's already happening. Third, regulation signals. Freedom means the reserve is helping. Surveillance means the trap is closing. The irony is this: Bitcoin's biggest institutional win could also become its biggest test. Government support always comes with strings. The only question is whether those strings become guardrails or chains. So, what do you think? Does a strategic Bitcoin reserve secure Bitcoin's future, or quietly change everything it was built to resist? Let me know in the comments.